Non-resident rental income tax filing requirements for USA, a comprehensive guide. Non-resident rental income tax filing requirements for the USA can be a complex and confusing topic for those who are not familiar with the tax laws. As a non-US citizen or resident, it is important to understand the tax obligations that come with owning rental property in the United States. Failure to comply with these requirements can result in penalties and fines. The Internal Revenue Service, IRS, requires non-resident aliens who receive rental income from U.S. properties to file a tax return each year. This applies to both individuals and corporations. The tax return must be filed on Form 1040-NR and must include all rental income received during the year, as well as any expenses related to the rental property. Non-resident aliens must also pay a withholding tax on their rental income, which is typically 30% of the gross rental income. It is important to note that some countries have tax treaties with the United States that may reduce or eliminate the withholding tax on rental income. Non-resident aliens should consult with a tax professional or the IRS to determine if they are eligible for any tax treaty benefits. Overall, understanding the non-resident rental income tax filing requirements for the USA is crucial for compliance with U.S. tax laws and avoiding any potential penalties or fines. Understanding non-resident rental income tax. Non-resident aliens who receive rental income from a property in the United States are required to file a tax return with the Internal Revenue Service, IRS. The rental income is generally subject to a flat 30% tax rate, unless a tax treaty provides for a lower rate. To determine the taxable rental income, the non-resident alien must calculate the gross rental income received during the year and then deduct any allowable expenses related to the rental property. Allowable expenses may include property taxes, mortgage interest, insurance, repairs, and maintenance. It is important to note that the non-resident alien must keep accurate records of all rental income and expenses related to the rental property. These records must be kept for at least 3 years from the date the tax return is filed. If the non-resident alien has a rental property that generates a loss, the loss may be carried forward to offset future rental income from the same property. However, the loss cannot be used to offset other types of income, such as wages or investment income. In addition to filing a tax return with the IRS, the non-resident alien may also be required to file state and local tax returns. The rules for state and local taxes vary depending on the state or locality in which the rental property is located. It is important to consult with a tax professional to determine the filing requirements for each state and locality. U.S. tax laws for non-resident rental income. Non-resident aliens who own rental properties in the United States are required to file tax returns and pay taxes on their rental income. Failure to comply with these tax laws can result in penalties, fines, and even legal action. This section will provide an overview of the U.S. tax laws for non-resident rental income, including the Foreign Investment in Real Property Tax Act, FIRPTA, and Internal Revenue Code Section 871. Foreign Investment in Real Property Tax Act, FIRPTA. FIRPTA is a tax law that requires non-resident aliens to pay taxes on the sale of U.S. real estate. Under FIRPTA, the buyer of U.S. real estate is required to withhold 15% of the purchase price and remit it to the IRS. This withholding tax is intended to ensure that non-resident aliens pay their fair share of taxes on the sale of U.S. real estate. Internal Revenue Code Section 871. Internal Revenue Code Section 871 requires non-resident aliens to pay taxes on their U.S. source income, including rental income from U.S. properties. Non-resident aliens are subject to a flat tax rate of 30% on their rental income, unless they qualify for a lower tax rate under an applicable tax treaty. Non-resident aliens who own rental properties in the United States must file a U.S. tax return, Form 1040-NR, and attach Schedule E to report their rental income. They must also obtain an Individual Taxpayer Identification Number, ITIN, from the IRS to file their tax returns. In conclusion, non-resident aliens who own rental properties in the United States must comply with U.S. tax laws and file tax returns to report their rental income. Understanding these tax laws and seeking professional advice can help non-resident aliens avoid penalties and legal action. Filing requirements for non-resident rental income. Non-resident aliens who earn rental income from U.S. real estate properties are required to file U.S. tax returns and pay taxes on their rental income. The following forms need to be filed to comply with the U.S. tax laws. Form 1040-NR. Form 1040-NR is the U.S. non-resident alien income tax return. This form is used to report rental income received from U.S. real estate properties. Non-resident aliens must file this form if they have rental income from U.S. sources that is not effectively connected with a U.S. trade or business. Form 8288. Form 8288 is the U.S. withholding tax return for dispositions by foreign persons of U.S. real property interests. This form is used to report the sale of U.S. real estate properties by non-resident aliens. Non-resident aliens who sell U.S. real estate properties are subject to a withholding tax of 15% of the gross proceeds from the sale. Form 8288 is used to report the withholding tax and remit it to the IRS. Form W-8ECI. Form W-8ECI is the certificate of foreign persons claim that income is effectively connected with the conduct of a trade or business in the United States. This form is used to claim an exemption from withholding tax on rental income that is effectively connected with a U.S. trade or business. Non-resident aliens who have rental income that is effectively connected with a U.S. trade or business can claim an exemption from withholding tax by filing Form W-8ECI. In summary, non-resident aliens who earn rental income from U.S. real estate properties are required to file U.S. tax returns and pay taxes on their rental income. The forms that need to be filed include Form 1040-NR, Form 8288, and Form W-8ECI. Tax deductions and credits. Non-resident aliens who earn rental income from properties in the United States may be eligible for certain tax deductions and credits. These deductions and credits can help reduce the amount of tax owed on rental income. Itemized deductions. Non-resident aliens can claim itemized deductions on their tax return. These deductions include expenses related to the rental property, such as property taxes, mortgage interest, repairs and maintenance, and depreciation. It is important to note that non-resident aliens cannot claim the standard deduction. Instead, they must itemize their deductions to claim any tax benefits. Foreign tax credit. Non-resident aliens may also be eligible for the foreign tax credit. This credit allows taxpayers to offset the taxes paid to the U.S. government against taxes paid to a foreign government. To claim the foreign tax credit, non-resident aliens must file Form 1116 with their tax return. This form calculates the amount of foreign tax credit that can be claimed. It is important to keep accurate records of all foreign taxes paid to claim the credit. Taxpayers must also meet certain criteria to be eligible for the credit, such as having a tax home in a foreign country. Overall, non-resident aliens who earn rental income from properties in the United States should be aware of the tax deductions and credits available to them. By taking advantage of these benefits, they can reduce their tax liability and keep more of their rental income. State tax obligations. In addition to federal tax obligations, non-resident landlords must also consider state tax obligations. Each state has its own tax rules and regulations, so it is important to research the specific requirements of the state where the rental property is located. Some states require non-resident landlords to file state income tax returns, while others do not. For example, California requires non-resident landlords to file state income tax returns if their rental income exceeds a certain threshold. On the other hand, Florida does not have a state income tax, so non-resident landlords do not have to file a state income tax return. Some states also require non-resident landlords to withhold state income tax from rental payments. For example, in Hawaii, non-resident landlords must withhold 7.25% of the gross rental income and remit it to the state. Failure to withhold and remit the required amount can result in penalties and interest. It is important for non-resident landlords to understand their state tax obligations and comply with all state tax laws. Failure to do so can result in penalties, interest, and possible legal action. Non-resident landlords may want to consider working with a tax professional who is familiar with state tax laws to ensure compliance. Professional assistance and resources. Non-resident rental income tax filing requirements for the USA can be complex and confusing. Fortunately, there are several resources available to taxpayers who need assistance in navigating the process. Certified Public Accountants. Certified Public Accountants, CPAs, are licensed professionals who specialize in tax preparation and planning. They can provide valuable assistance to non-residents who need help with their rental income tax filings. CPAs can help ensure that all necessary forms are completed accurately and on time. They can also provide guidance on tax planning strategies that can help minimize tax liability. Tax attorneys. Tax attorneys are legal professionals who specialize in tax law. They can provide assistance to non-residents who have complex tax situations or who are facing tax-related legal issues. Tax attorneys can help ensure that taxpayers are in compliance with all applicable tax laws and regulations. They can also provide representation in the event of an audit or other tax-related dispute. Internal Revenue Service resources. The Internal Revenue Service, IRS, provides a variety of resources to taxpayers who need assistance with their tax filings. Non-residents can visit the IRS website to access a range of helpful resources, including tax forms, instructions, and publications. The IRS also offers a toll-free helpline that taxpayers can call to get help with their tax questions. In conclusion, non-resident rental income tax filing requirements for the USA can be challenging, but there are several resources available to taxpayers who need assistance. By working with a CPA, tax attorney, or utilizing IRS resources, non-residents can ensure that their tax filings are accurate and compliant with all applicable laws and regulations. Visit our website or call us for any questions.